Let's dive into what's happening with SoFi this week, analyzing key events that could impact the stock price, market trends, and short interest. We have some major economic data releases lined up that could trigger volatility, so let's break it all down. Hello everyone, welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads and also enter our giveaway. But before that, alert, this is not a financial advice video. This week holds significant importance as multiple data points are scheduled for release, including the GDP report on Thursday and the PCE inflation data on Friday. The latter is particularly crucial, as inflation data tends to influence market sentiment. Additionally, several Federal Reserve officials will be speaking throughout the week, potentially affecting stock movements depending on their statements. Another factor to consider is the rebalancing by institutional investors as we approach the end of the first. While Monday marks the official conclusion of the quarter, most adjustments will likely take place by the end of this week, possibly leading to an uptick in trading volume and, consequently, more price swings. On the geopolitical front, former President Trump has confirmed that tariffs will take full effect starting April 2nd. While the market may have already factored this in, some investors might have assumed the measures would be softened or postponed. This uncertainty could contribute to additional fluctuations. Moreover, fresh trade tensions have emerged between the U.S. and Canada, as Canada has issued a travel advisory warning that visitors staying in the U.S. for over 30 days may face fines. This unexpected development could stoke further tariff-related concerns, adding to market unpredictability. Turning our attention to short interest, approximately 12.29% of SoFi's free float is currently being shorted, equating to 132.37 million shares. Short interest hasn't seen any drastic movements recently, fluctuating slightly day by day. The recent high was recorded at 12.44% on February 26th, while the lowest level observed was around 12.15%. If Trump reiterates his stance on tariffs earlier in the week, it could embolden short sellers to increase their positions, so it's something to watch. Examining options activity, SoFi closed at $12.87, meaning strike prices at $12.50 and lower are now in the money. Notably, there are 11,000 contracts at the $12.50 level and 14,000 at $12. Based on data from Friday, the total in-the-money options stand at around 76,000, which could contribute to some positive movement as the new week begins. Looking ahead, the stock has shown resilience, bouncing off a key support level and signaling a potential move back into the $13 to $17 range. Given its current price level of $12.87, it is positioned between the S2 and S1 support zones. Holding above $12.72 on Friday was an encouraging sign, suggesting potential upside momentum heading into this week. The next key resistance levels to monitor are $13.59 followed by $15. Technical indicators also present a mixed but generally positive picture. SoFi is currently trading above its 200-day moving average, which sits at $11.06. Additionally, the 150-day moving average and 200-day moving average are closely aligned around $14.55, $14.56. Should the stock gain momentum, it may consolidate near these levels before attempting a breakout. The broader market's reaction to economic data, Federal Reserve commentary, and trade developments will play a crucial role in SoFi's performance. Any unexpected events, such as new tariff announcements or macroeconomic surprises, could influence the stock's trajectory. Fundamentally, SoFi continues to strengthen its position. Recent discussions around Galileo, its technology platform, have highlighted its strong growth potential. Unlike many other high-growth stocks, SoFi has implemented measures to mitigate risks, making it a compelling investment option even amid market uncertainties. Investor sentiment remains divided. Some traders anticipate a potential short squeeze, although that would require a significant catalyst. While discussions about a possible squeeze have been circulating, no substantial indicators suggest it is imminent. However, the stock's strong fundamentals could support long-term growth regardless of short-term market movements. One concern raised in recent discussions is the appearance of Form 4 and 144 filings indicating insider selling. While some interpret this as a bearish signal, the timing suggests otherwise. If insiders were genuinely looking to offload shares, they would have likely done so earlier in the year. Given that the blackout period has just ended, this selling activity does not necessarily signal a downturn. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.